The S&P 500, the Nasdaq 100, that's what we're discussing here on the day. Now, when we look at some of the action, it hasn't been as good as we've hoped for, right? We talk about some of the key levels we've been watching where the underlying trend could possibly change, getting back above 44.25 on ES. But ultimately, when we look at this action playing out, you have that head and shoulders that kind of played out there. We got the retest of those previous lows, the rejection again at 44.25, the level we wanted to mount, and we're breaking back down, back into some of these key influential zones, as we've mentioned. Now, it's also important to know as we get rid of some of these zones, and you can look, you're breaking back below the 200 SMA as well on the daily. These are big signs you didn't really want to happen. Giving you a, for instance, on where the trend kind of changed. On the past year, January, right? You get above the 200 SMA on the daily. You get above the 200 SMA back in, March, right? That's where the trend really changes. So getting back below these potentially, and if we start to hold here, it starts to set the table up for some pretty worrisome price action, if you will. You go over really quick to the Nasdaq as well. 15.4 was that level as well. You zoom in here, as you can see, you're coming into those levels and you're just getting rejected. It's just the fact of where we're at. We're coming back down into massive levels around 14.85 and then back to, of course, 14.6, but we're not back below the 200 SMA just yet as well. Now, if you have been following SPY, I think SPY, like I've been mentioning, I mentioned yesterday, go rewatch the tape if you need to. Below 431.5, we're bearish. Above that level, you're looking at bullish price action. But of course, we're rejecting nonstop from here. And it looks like SPY wants to come back into its 200 daily as well, where we bounced last time around. So these are definitely areas we need to keep on our chart, areas we need to be watching pretty closely. But most of all, keep your head a little bit on a swivel here because it's not ideal where we're moving and what's going forward here. Now, before I go into exactly why this is happening and what's dropping us, I have to ask you to do two things. Consider liking and subscribing. It helps out the channel tremendously. I appreciate all the love and support. The Discord link is also down below if you are interested, but never feel like you need to be paying to get information here, right? We have Twitter. We have the free education section on the website as well, going over how we trade and things along those lines. But if you want to get hand-holding, understand what we're trading throughout the day, everything in between, getting voice chat with traders as well, then maybe Discord is for you. I also want to go into our... And before we go any further, I want to give a special shout out to the sponsor of this video and a new sponsor of the channel, Chart Prime. But what if I could tell you now we have something in a tool that's going to be able to give you all of our key levels or a little bit of a cheat sheet going into these as well. And then also breaking down massive levels you need to be watching for buyers and sellers in between the charts. Or what if you can also go into your chart, quickly identify the patterns that are there, whether it be broadening wedges, head and shoulders, double tops, or anything along those lines. And one thing that you guys know is that I'm never going to stand behind a product that I wouldn't use myself. That's why every single day I am officially going to be using Chart Prime and these specific indicators to help us on the live streams and in the daily videos to make charting quicker, faster, and of course giving us advantage to see things that we may have missed that AI will no longer be missing. And this is just one chart. If you're interested, the link will be down below, and if you use our code, you'll get 30% off every single month. Make sure you check them out. And if you have questions, feel free to comment down below. Let's get back to the video. Okay, so as we jump back in here, let's discuss a little bit what's happening. Now, number one, we had Powell speaking on the day, and you could take a few things what Powell said. I wouldn't necessarily take the title here is Powell sets November out for a pause. I wouldn't necessarily say that's what he did. I really wouldn't. I don't think it was necessarily pause. I definitely think that he went with the notion of his exact words, we're not, some could say we're not as restrictive as we need to be yet. His exact words. Now, what he did say, he did affirm what we recently mentioned, is that potentially yields being this high as far as the 10, 30, 5, and 2, right, being this high and continuing on the uptrend, maybe have impacted and helped do some of the Fed's job as well. After Powell talked, yields came down. The 2-year, the 5-year held up a little bit, the 10-year came down a little bit, and the 30-year, but primarily that short-term 2-year, which has been doing a lot of damage over the past few days. But we did see oil start to go up, and we'll talk about that here in a second. And then DXY also had a bit of a red day as well. And then the big news today as well that kind of, in my opinion, what really started to push us down is you started to see more involvement from the U.S. and we started to see mentions of, interceptions via missiles, drones, etc. So U.S. Navy warship that's currently on its way to Israel, etc., downing several drones, and American bases were struck today as well. Now, again, this does not necessarily mean we're getting involved. I got to clarify because I don't want people to say I'm spreading misinformation. However, any type of involvement is not good, and you can see the market not liking it. Important to understand, important to be watching. Okay, so that's kind of the base news that's happening there. It's seeming like sooner than later, more people are going to get involved in this, Israel thing, and it's just overall not good news. You can look at some of those stocks today as well. LMT continues to get love to the upside. RTX continues to get love to the upside as well. Got a little bit of a wick. LMT obviously performing better here, though, going into that 200 SMA and that level mentioned from our chart prime indicator, right? So things to be watching, things to, keep on your radar. Now, as well, we go into some of the stocks that had earnings yesterday. Netflix, very strong day holding up. Tesla, pretty brutal, right? Coming back down into our massive level and the 200 SMA. So I don't want to do too much going into equities right now just because of where we're at. However, I'm going to say right now, you're almost at that bounce or die territory when it comes to ES and the Nasdaq. So definitely be watching that. But what I will say from these levels though is, you're coming into massive levels. Tesla as well, the 200 SMA. The last time we were below the 200 SMA on the daily, it started back here September 2022. We haven't been back below it since May. You got back above that area, and remember, we shot straight up. So, food for thought where we're at and kind of how we're moving. Now, one stock that I am watching in particular here is Apple. And I think Apple is one of the best stocks to give us a viewpoint of the market and the overall health. Now, today was not a good day for Apple. You continue to kind of track down and down and down. If you remember on my Twitter, I posted a chart earlier this week. I believe it was Sunday evening when I posted this chart, but I said on here, right? Apple, I expect 174 soon, right? Major key level pushing down from that China news. So I do think 174 is in the works here. Now, what I will say, if Apple starts to lose 174, I think you're tracking a key touch of the 200 SMA pretty quick soon after that. But the question with Apple is, does it start to flip the narrative on the market for that risk on versus risk off? That's the big question there. We've talked a lot about IWM and what's happening here, but IWM started to lose its major support. That 170 has held strong, and now you're getting back below these levels. You're also seeing new levels start to establish themselves as resistances here. So again, not ideal, right? Especially from a risk-on perspective, okay? These are things that we have to be paying attention to. We go into something like VIX, and we look what happened here. VIX, again, has been hitting that brick wall as of recently around $20. But today, it did something a little bit differently. You got above 20, and we're moving to 21, 22. Again, but this makes sense as we look at the news, and like I keep saying, you got to keep your head on a swivel when it comes to this Iran news. You have to keep your head on a swivel, right? Very important that we're watching these levels and watching what's happening here in the news, because we can't overall predict, and I will say this over and over, really bad news is going to trump TA every day of the week. I can have the best bull flag on top of every moving average, on top of great volume, etc. But the second news starts to come in that's very negative, right? U.S. getting involved in any type of war, etc. That's going to trump everything else. I'll tell you that right now. Now, we look at the volume today as well. Around the last hour, we had about 75 million, which was already good. But to the end of the day, right now, we're at 121 million, which again is some of the best volume that we've had in weeks. I mean, you can go and scroll all the way back. You haven't had 120 million on SPY going back through almost, I believe, I'm still scrolling. Jesus. Going all the way almost back to March, you have 119. So yeah, going back here to March 15th is the last time, and that was our banking crisis when we had all this volume back here. So not ideal, okay? Not ideal behavior, not what we wanted to see, okay? Things to keep on your radar, things to be watching here, right? You saw volume ramp up. Could be an indication of, finding a lower high here and pushing down and possibly finding a lower low. Now, I will say I'm not heavy into shorts just yet. I would like to see a hold below local levels here, and I would like to see the weekly if it closes below the 200 SMA here as well. But I am watching. I am being vigilant. I am not overplaying my hand here in any way. I still have my Costco. It's still dated for December, and then I have my 2025 contracts on Tesla still, Might start adding more to those as well here in the future. Again, contracts for 500, 400 days out. Those are leaps, guys. So I don't know how else to like really talk about those. If you don't understand leaps, then maybe just don't trade them. But that's what I will say there. And again, I will remain transparent on that viewpoint as well with what I am watching and what I am trading. So hopefully that makes logical sense to you guys and you can understand what I'm doing there. Now going over a few names. Now what I will say though, you're still seeing some of this action that's interesting. Okay, you're still seeing some interesting action. For instance, Microsoft. You're holding 330. Very strange. You have a, $4 down day on SPY, almost a, percent down day. But Microsoft is still above 330. Interesting. Nvidia held up at 420 today. AMD had a green day as well. They had some chip news. I'll just keep saying, some of these names are holding up decent despite indexes getting hammered. Now, of course, names like, Nvidia has had some downtime. AVGO, we mentioned yesterday, if you got above 889, it's a long. Below 889, you're looking down to 870. Go watch the video yesterday, rewatch the tape, exactly the words I said here. But again, you're getting some downside, of course, but still, equities are trying to hold up the best they can here, right? So I haven't seen the market fully flip over to risk off and pulling the shelf and really selling off. I haven't seen that just yet. But what I will say is I am in the area of understanding that this is a high risk territory in which you're in. You need to understand that. As this news continues, and I assume it's going to ramp up over the weekend, you need to keep your head on a swivel and you need to be pretty vigilant here, right? There's no reason to get over aggressive. There's no reason to start slamming calls, slamming puts. There's no reason yet, okay? There's zero reason, especially until we get that technical breakout, okay? Now, the one area, if you want to start hedging for yourself, in my opinion, I think oil longs are a good hedge. Great hedge, actually. Something like Exxon, definitely something that can protect your account if you're, kind of long on tech names. I think oil is a good hedge. Exxon can easily push back into 119, 120, especially over the 200 SMA there. You have Oxy as well, trying to break out from these levels mentioned around 67, give or take. Over 67, we could see all-time highs back in, 76, 78 are local highs, 52-week highs there. So these are things to be watching. Now, on the tech side of things, if you're just in love and you just need to be playing some of those, right? You got to. You're like, Tyler, I got to get my fix in. I got to be playing those. Now, I would be interested in watching Apple if it stays above 174, but if it loses 174, I think you got to flip to bearish at that point. Number two, I think Netflix had a great report. They might have some downside in the near future, but once this thing gets above the 200 weekly moving average, which is around 420, give or take, you're looking long on that one as well. You also got to be watching names like Microsoft for getting a bounce as well because it's holding 330. I also believe Tesla, despite how bad their earnings were, despite how bad Elon Musk sounded during that earnings call, if you hold the 200 SMA here on the daily, you'll look good. So you got to be watching these levels, watching where we're at, and there is potential for opportunity here. But I'm gonna tell you right now, I'm not hammering calls yet. I'm being pretty patient. Any calls I do have are either really dated or they're in areas of the market that I find pretty safe, right? That are still gonna do well no matter what. I.e. Costco, Walmart. I think those areas of the market are pretty safe. If they do get downside, I think it'll be minuscule in comparison to tech. That's why I haven't shifted my focus back into tech as far as leaps and calls there, right? So you have to be able to understand your risk, distribute your risk accordingly, and protect yourself at all times. That's the name of the game here. Protect ourselves. Stay alive. Stay alive. That's the name here, right? Protect our capital, because what do we know here, guys? I'm going to leave you with this real quick. What do we know? When it comes to the Nasdaq, do we make our money here in this chop? Is that where you traditionally make your money, in that range? That's not. That is not, little Timmy. That is not. Where you make your money, where I make my money, is when you get the breakouts, right? If we go back, we rewind the tape on the year, everyone was bearish, but we were bullish. We were trading that March breakout into basically July, right? That's where you made all your money this year. That was the bulk, right? Y'all saw the tapes. Y'all saw the screenshots of withdrawing from our broker accounts. That's why I haven't posted any withdrawals right now, because I'm not trading as much, right? You don't see me faking it. I show you when I take them. I show you when I'm just doing nothing. And right now it's been pretty lackluster, right? It's not all rainbows and unicorns. You're not making $1 million every day, but you got to understand when you make your money and when you're setting yourself up to lose money. Hopefully you guys understand. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one, traders.